Thank you so much for such an introduction. Before starting, Salam alaikum, habibis! Good morning, everyone. Welcome back to World Blockchain Summit Day 2. We're going to try to make this fun. Thank you so much for waking up, for being here, and hopefully we can provide you with tons of actionable items and value. But without further ado, let's kick off with a quick introduction. If you guys can keep it 30 seconds each, tell us who you are, what you do, and why you're here today. Will.
So, hey, how's it going? William Bao Bean, Managing General Partner, Orbit Startups. Started investing in the space in 2015 with 4 blockchain fintechs. 3 died. One was BitMEX. So I still get to keep my job as a venture capital investor.
Congratulations. Hasnae.
So, Hasnae Taleb, currently CIO at Ento Capital. I have done a couple of things. Started my whole career back from Wall Street, so I'm a pure traditional investor, right? I have done equity trading, stock trading since I started in the floor of NASDAQ, ex-Morgan Stanley, then I came to the UAE, and that's where I explored more verticals in investments. I started with the executive council. Later, I launched a couple of startups, which I exit. And currently, as I said, partner in CIO. It's funny to hear. And at the side, I've done a lot of media work. So I have my own investment TV shows. I have done a lot of work on social media and all these things. So it will be interesting to hear what a traditional investor would think about crypto and Bitcoin.
Thanks so much, Hasnae. José.
Thank you, Alex. Pleasure to be here. My name is José Pereira. I'm a partner at Caerus, and we are a venture capital fund with a mission to create more of what matters most, and that's culture. Culture is music, sports, entertainment, gaming, fashion, and we invest into the technologies that are disintermediating the value chain from how culture is financed, produced, distributed, to how it is owned, consumed, and monetized.
Amazing. Elodie.
Hi, everyone. Elodie. I'm Head of Growth and Strategy for Hub 71, which is the global tech hub of Abu Dhabi government. And a little bit about myself. I've been 20 years in the aerospace and defense industry. Flew 7 years ago in Silicon Valley, was shocked, decided to leave my suit and to do everything I can, to support entrepreneurs and founders who are trying to disrupt the future of our economy. So yeah, that's me.
Fantastic. And we don't have only just one, but we have 2 women. Let's give it up for the women here on the stage. There you go. A little bit of energy. Awesome. Andre.
I was surprised to see another woman in the panel.
You're usually the only one, right?
Good morning, everyone. My name is Andre, French-Canadian. My career was either digressing or progressing, however you want to see it. I went from investment banking, private equity, now venture capital. So we focus in Africa mainly, deep tech, including blockchain. And happy to be here. Thank you.
Awesome. So who here is an investor? Please show me your hands if you invest. Okay, not so many. Who here is trying to raise funds? Needs money?
Everybody.
Okay, everybody. Fantastic. So hopefully we can do this for everyone. But the first question, and there's a very famous proverb, which is, sometimes you win, sometimes you
lose.
Or learn, right? So sometimes you win, sometimes you learn. So we're going to start by kicking off with some of the mistakes that we've seen, the commonly made mistakes. And Hasnae, you have managed $4.7 billion of assets under management. I'm sure you've seen tons of mistakes out there. And what were the learnings, if you don't mind sharing, either the investor standpoint or the person raising funds, startup standpoint? Any side is fine.
Yeah, I have seen this for the last decade. Investors, and especially retail investors, make 2 major mistakes. The first one is running after the crowd. When we started hearing about cryptocurrencies, everybody ran after cryptocurrencies, people that understood nothing about the technology, nothing about what moves the price of an entity. So it seems to be like a pure hype and dump at some point. And that will lead to, for me, to a collapse in the industry at some point, right? Before the correction. The second thing is that people didn't define an exit strategy before they enter the market. And I have seen this in everything, like in equity trading, since I have done stock trading my whole life, and investments. So they enter a position or they enter an investment opportunity without knowing when and how to exit. And now we are seeing the same thing happening in AI. And I think that what creates at some point a bubble in the investment world.
Beautifully said. Elodie, if you don't mind commenting from the startup standpoint, maybe the mistakes you've seen for those who are trying to raise funds. You have currently 270 startups at Hub 71, is that correct?
Yeah, correct. We have 250 founders and team with us in Abu Dhabi. And I think one of the biggest mistakes I'm seeing, is like all these new joiners which are joining our community are obsessed about fundraising. And the point is that I think there was maybe a little bit of bias around that. The first thing you should be doing, especially now when we see, the ecosystem, is to try to build a profitable company. So focus on the market, focus on getting traction, on getting your product market fit. This is very obvious advices, but when you are aligned with your market, that's where the investors will come, not because you have a nice pitch deck.
And you were just telling me about this just a few minutes ago, Bill. Do you mind commenting on the revenue side or anything, either the startup or the investor side?
Yeah, so we kind of learned our lesson in the early days. The first thing is we're very, very regulatory friendly after not being so friendly in the old days. So all the companies that we're investing in either have a license or a path to license or are somewhere in the journey. The second thing is that, at least for blockchain fintech, we're trying to get to revenues early as possible. One of the challenges with a project is projects aren't companies. And we're trying to get the project to be a company as soon as possible. So it does take time, but we're patient. The last thing is, if you think about these cycles, we're very early stage investors. So we're quite active 2015, 16. We stopped in 17. We were more active 18, 19. We stopped 20, 21. And now we're active again. And I'm looking forward to not being active.
It's definitely totally on that. Jose, yourself, I think you'd rather
Yeah.
the investor perspective or...
Yeah, from the fundraising perspective, there's this quote that I loved when I came across. It was, if I had 6 hours to chop down a tree, I would spend 4 sharpening the axe. And I really liked it because when you go and ask for money, you only have one shot to make that one impression, and it's good to have all your ducks in a row, all of your materials, your value prop as refined as possible. And that preparation is really, really important. Then on the differentiation side, I think it's also important, given that you have the substance, doubling down on what makes you different, because you're going to have lots of funds that are coming up or lots of startups that are doing the same thing. And ultimately, investors invest in people. So I think that doubling down on what makes you unique is definitely very important.
Beautifully put. Andre?
I think I'll just add to maybe another comment that to William and Hasnae as well. So it's one thing understanding the technology, the strategy, the unit economics. One of the lessons we got from our portfolio company as well, and is really the ability to fundraise. And it's been very challenging for many founders, but knowing how to fundraise in these current economics and climate is quite important. And the idea of free money no longer exists. And we got caught a bit because we really focused, again, on the tech, make sure it's solving a problem, on the strategy, and kind of bypass how are you able to fundraise in a climate where capital is scarce. So lots of lesson here, both for us as we're fundraising for the fund, but also for our founders.
All right, awesome. Thank you so much for that. And I guess
have
one of the...
something to add when
Please
it
go
comes to
ahead,
fundraising. I really think that founders make one of the biggest mistakes, which is trying to fundraise the traditional way. And I see that all the time. Like, I would receive tons of emails or people just show up in the office and then be like, hey, I have this project and I think it's an opportunity for you to invest in. I don't look at that because I feel like that approach is wrong. So I would, this is funny, like the more you chase something, the more it runs out of you, right? So I feel like the more you show and the more you're making noise in the market, the more you do have investors like us or like any of the investors here to go after that and to explore more the opportunity.
I would love to hear some comments. This is a very interesting point. Do you guys agree that, if you come across as throwing your decks everywhere and coming across as desperate, it could be detrimental to a project and fundraising? And how do you,
Especially in the Middle East.
especially in the Middle East? Anyone want to comment on this?
I think it depends. It depends on how strong is your, let's say, your social presence, your network. But if you don't have that and you're just starting from zero, I think it is hand-to-hand combat and going for the ask. Of course, you need to do research on who these investors are, what are their past deals, and then finding a fit and pitching to that fit. But I don't see anything wrong with going more aggressive on fundraising during these times.
No investor will be honest to you and say, yeah, if you approach me, yes, I'm going to invest in you.
So I think...
No one will be honest with the approach.
And I'm going to let Will answer this after, because he's really good at fundraising, but also for startups. But the way we see this is all about relationship. Yeah. Whether it's an American startup, African, Middle East, it does matter where you're raising. I totally agree. Build that trust, build relationship. We've never invested either from the family office or VC fund as great FOMO, next week I'm wiring you $100,000 or $500,000. Never. And I think this is how you invest nowadays, and I think this is a lesson that most people have to learn for the long term to be sustainable in fundraising. I'll give it to Will, because Will has a really good way to explain with founders how to build trust and the concept of dots.
So, three things. The first is, we're sitting in like Grand Central Station for scams, right? So one of the traditional ways of doing things is you build trust by building your cap table. I don't think it's actually that necessary to have this name and that name and that name on your cap table, although it helps. So for us, it's about referral. If you have people that you trust, or if you have partners that are trustworthy, or if you even have investors that people have trusted, then it makes things a lot easier. So it's not so much, like blowing money on parties or whatever, or making a big splash. It's basically building that circle of trust, and you don't actually need to spend a lot of money on it. But if you've got people who are willing to know what you're doing and willing to refer you, willing to introduce you to other people, that matters quite a lot. So for us, it's not that hard for us. We have 550 mentors that volunteer their time to help our companies go from where they are to where they want to be. So if you can't get to one of us, you just go to one of them. And if they, if you can get them over the line, then it's a lot easier to get us over the line.
I'll give you a trick, Alex, right? When it comes to fundraising, this is where I learned, especially from, Silicon Valley investors. So if you get to build that trust and relationship with one credible investor, it doesn't matter how much credit you're giving them, and it doesn't matter where they sit on the cap table, but then you build that trust and they invest in you. It doesn't matter how much, right? And they invest in you, and that investor is going to build that whole reputation with other investors. Imagine I have one of the big VCs in San Francisco investing in my startup, right? Maybe they have invested just $50,000. It doesn't matter for me, right? At some point, wherever they go and said, oh, I have invested in that startup. So he's doing me free PR, and it's a good name that I can leverage on with other investors. Then I can get the trust of other investors to invest in.
Valley VCs are sheep.
Elodie, would you like to comment on this? And do you see these type of trends, as well as saying, is you catch that first big fish that will then ripple down or have a snowball effect to other investors, but also the power of the referral and warm introductions?
No, I agree. Doing fundraising is a little bit of a poker game sometimes. And it's like, when I get this one, I will get the other ones. What we are trying also, now in Hub, we are trying to work on a couple of specialized ecosystems. So we launched digital asset. We'll announce soon something around climate tech. And, the advice that we are giving to the startup we are supporting for fundraising is that, of course, come prep. Know if it's a match between these investors and you, but definitely try to approach investors that could be strategic investors for you. Think about your growth. see how you could leverage potentially the network of the different GPs, of this fund, and how they will be able to support you with value creation also. So depending on where will be your international expansion, if you are in more on the hardware side of things, how they can connect you with the industry and your potential customers. So think about it from the beginning, so you will have these investors being able to support you and to support your growth also on the long term.
Awesome advice. So don't forget to make your list, everyone, of your investor profiles and personas. Who's the best match, right? To start with.
Just to give context, because I think that the aggressive strategy and the cold outreach does work, but I think there's a time and a place to that. So when you look at your fundraising strategy from a high level, you could break it into stages. The first one, you would exhaust those close connections, those people that were going to put the name for you, and ideally that's going to give you the momentum to then go to the, let's say, second-degree connections, and then as a last resort, you would go with the cold outreaches. But ideally, if you can get some money in first, every VC is scared to put that first ticket because you have the fundraising risk. What if you transfer the money and then they are not able to fill the whole round? Trying to get that back is almost impossible. And also the first VC is the one that locks in the valuation. So you would phase it into 3 stages and put the cold outreach at the end once you already have some traction on the fundraising. Just to give that a little bit of context, so it doesn't sound like you just go randomly on LinkedIn, find investors, send cold DMs, and you just go. There's like a step-by-step strategy for that.
It's like a nightclub with nobody in it, right? So you don't want to be the only one in like the dance party. So
first you bring in the handsome guy, and then everyone follows.
Hopefully more than that. But the general idea is that for VCs, they like to go in groups. On the one side is FOMO and sheep, but on the other side, basically they want to know that when shit hits the fan, and it usually does, that there's more than one person there supporting.
Fantastic. One last question on the fundraising side, everyone. Like, as you were mentioning, you do not need to splash so much money in order to get the initial investments. In terms of location, a lot of people think that they just come to an event, you get off the stage and straight to Andre, I'm going to pitch you my project, which may not work. Have you ever had any funny stories of locations of where, or just unusual, unorthodox locations on where you can start raising funds to build that trust and not necessarily always be at an office? Are there any examples, anecdotes, or stories?
I think that the best way is on the side events.
Side events.
I think that for people fundraising, it's a more personable approach. And you can go build that trust and then connect, follow up the next week, and then go for the pitch. I think that's better than trying to, rush into a pitch, let's say in the middle of the event when people are busy. So I think side events are a perfect place.
A little more relaxed.
Why you say that? It was never something that I looked into or was successful to me. I really think for me, that's just my personal experience, it was always a waste of time. It's people that just want to hang out, especially for women, right? It's people that just want to hang out and have fun, and that's it. Nothing gets closed. But what really worked for me in terms of fundraising, either for funds or for startups, is one thing. It's getting that first shark, and through some connection somehow, right? It's someone that would introduce me to that person, and it's my target. I go to that person and I'm like, hey, it really doesn't matter how much you invest with me. What I need is you, and I need your name, and I want you to be with me because I need you. And then this person comes in and sees the dedication, and of course, they should see a very good product, right? They should see a very good infrastructure and a great team. But then once I do have that person, I think it just, I can call this person anytime and say, hey, what about XYZ investors? What do you think? You can make an introduction or no? I think that's how, for me, that's how it worked most of the time, and that was more effective and efficient than just hanging out and try to raise funds. I mean, I don't know, but I don't know if anybody has been successful raising funds.
I'll be the devil's advocate.
In an event.
As I said earlier, I think investing for us is about trust and relationship. Now, where the starting point is could be anywhere, right? One thing for sure is I'm not going to write a ticket today from meeting someone today. There's no way, right? But we could start today, right? And start learning about what you guys do. If there's an alignment with a thesis, let's build that relationship and trust. And I give a lot of credit to founders that are willing to approach me or any type of investors in big events. It's not easy. It's a numbers game a little bit as well. And it's also really good practice, right? You get to do the elevator pitch for 30 seconds. It might be shit, it might be great, but at least you're learning. And if you're good investors, you'll push back, right? If you have a bit of interest, like, did you think about this risk? And then you initiate this relationship. So I'm here today not to show my face here, but really to be able to meet some potential founders. I do agree with you that it takes time. We're not going to write tickets today for sure, but maybe this is a starting point. Maybe.
I have a funny story, actually. There was this event. Right after a panel, I got approached by a founder. He was pitching his sports company. I liked it. We were talking for like 10 minutes. And then there was a startup pitch competition 4 hours later. And he was there pitching a separate company, a different company. So yeah, that was very funny.
That's insightful.
Yeah, that was a waste of time. Yeah.
You know you're not investing.
Yeah, if you are not committed to your company, how do you expect us to be?
Sorry?
Yeah.
No, if they're not committed to their company,
yeah, it's an
how do you
immediate red
expect us
flag.
to commit to a company? Yeah.
It's
So
an
yeah,
immediate flag.
just have one, please. Yeah.
Yeah.
Absolutely. Okay, and just one last tip before we move into the next theme, guys, is instead of pitching, I would highly recommend asking questions. So qualifying an investor will save you tons of time, will save them tons of time. Really got to understand, are they raising right now? Have they closed the fund? Are they deploying? And try to ask those questions elegantly so it's not too forceful. That's worked tremendously for us. We raised $25 million earlier this year. So, next topic. Who here wants to make money? Show me your hands. Who here doesn't want to make money? Show me a dance. Oh, that actually worked. I thought no one would laugh. So the next topic is what's hot or not? What do you think is a hot sector, subsector, asset class that you're really looking into? We talked briefly about AI with Hasnae earlier. It doesn't have to be AI, by the way. I know we're in an AI bubble. But yeah, Will, what are you seeing in the markets? What excites you today?
Yeah, so right now the market's pretty crap, so it's good for us. We are early stage. We buy low, sell high. So it's not for us so much what's hot, it's where we can help. So, I mean, we have money, we do invest, but nobody cares about our check that much. It's actually a very small check. So what most people work with us for is not the money, but the help. So we're into boring things that make money. So we invested recently in a mutual fund company. It's basically like Fidelity for Web3, digital assets. They have 3 products: high risk, medium risk, low risk. Literally, that's what the customers actually wanted. There's no flashy names. It's basically high, medium, and low. But they're working with like Julius Baer, they're working with Franklin Templeton, and they're Singapore licensed. So in the end, as we make this transition to mainstream, what's going to make money? Well, the vast majority of people are not going to do like this inverted triangle where we're all going after exotics, right? They want like simple stuff. Okay, I want to put 2% or 5% or 8% or 3% of my portfolio into this asset class or into this just in case it blows up. So what do I want? Okay, high, medium, low.
Very nicely put. Hasnae.
Yeah, so we have seen the third earnings quarter has already begun, and we're seeing mixed signals already, right? So some sectors that are currently doing well, energy and financials. However, tech is outperforming, and that's pretty normal because supply chain disruptions, interest rates are high, so it's very expensive for businesses to borrow money, and it's very tough for investors to actually really go and invest, tech companies or startups in general. Then the third reason is Ukraine war, and now another war that is happening as we're speaking. So all of these have affected the tech sector, and so we have seen, I think not just tech sector, but the market in general. People, and especially investors, are being a little bit, worried about this situation and what's going to happen and what's not. So it's a tough time, and nobody knows what's going to happen next. So everybody's just waiting for the next signal to decide on investments.
And I know, Jose, you were waiting as well for a little while and writing all the documentation, doing all the research. Do you see any cool trends nowadays?
Yeah. So first of all, I think funding is picking up. People are getting a bit more optimistic. There was this graph I saw that overlaid venture capital funding with Bitcoin's price. And the higher the Bitcoin went, the more funding that came in. And that's surprisingly non-strategic because it means that traditional investors are getting more conviction on the space as a whole as Bitcoin goes up.
Jose, it's picking up because it's the last quarter.
Sorry?
It's picking up because it's the quarter of deploying capital. It's not.
That is one of the reasons. That is one of the reasons. But at least what I've seen is that people get more conviction on Web3 when the price confirms it. So at least that was my interpretation of that. And that creates a mismatch between the need for funding and the actual funding. At the same time, you have the zero correlation between Bitcoin and the S&P 500, which is, I think, the first time in the last 3 years. So that's important. Now, where is that money going? I think that there's two main problems in blockchain as a whole. One is the fragmentation of liquidity. So over the last year, you have seen so many new blockchains, layer 1s, layer 2s that have come up. And that is good in a way, but at the same time, it separates, it fragments applications, liquidity, and users. So that is, solutions are coming up. I like Li-Fi, which is an API aggregator. It's something similar to what you were telling me, that Swissborg's new product. And then Router Protocol, which is layer 1, that solves that. Then the other problem, I think, is compliance. You have zero-knowledge technology. I prefer zero-knowledge over optimistic rollups. And what they do is that they enable the verification of information without revealing it, and that preserves that privacy ethos of blockchain. And the reason this is important is because I think that compliance layer is going to be the magic moment, let's say the killer app, that enables, once you have compliance, then you can have regulation, and once you can have regulation, then you can have traditional finance and big amounts of money that come into blockchain. So I think that that's one of the most exciting parts.
Fabulous. Thank you so much, Jose, for that. Elodie?
So on our side, it's a little bit different. You know, we launched the Digital Asset Hub 71 Plus 6 months ago. And the approach we took was to understand what was the readiness of the market to find the potential startup to attract to Abu Dhabi. So we worked a lot with Fab as an anchor partner, you know, to understand the use cases and the type of technology they were ready to welcome in their supply chain. And we worked a lot also with ADGM, because the very proposition of this cluster was to have from the beginning all the application and all the cases looked with the regulator, sitting with us, you know, to make sure that we were able either to put them in the sandbox and to get them out of the sandbox after a couple of years, or being financially regulated, or doesn't need any financial regulation. Our main focus in Abu Dhabi is to see, and it's very aligned with what Hasnae was saying, you know, we have amazing national champions into logistics, oil and gas, you know, banking, and it's ready to see how we can use blockchain. And blockchain is not only about crypto, blockchain is not only about NFT, you know, and metaverse, but how we can use blockchain as an enabler of the supply chain, especially in logistics or these kind of technologies. I think that's what we really want to build. On the other side, what personally excites me, you know, is now that Gen AI is becoming like a reality for all of us. For me, it will really bring, you know, like blockchain and the boom of blockchain with that trend, because we will need now to make sure that all the information that we are dealing with is real, you know.
Very nicely put in. If you don't mind elaborating a little bit on the supply chain you mentioned, what is the strongest use case, and if you can educate us on why you think the supply chain is really important?
So you will need to wait a little bit, because we onboarded our first digital asset companies 2 weeks ago. So what we did, the work we did, because we are an ecosystem enabler, so the work we've been doing last year when we got the blessing from the government to work on digital assets was to understand and to map the journey and to understand what was in Abu Dhabi for these companies. So we know we were scouting, you know, the right companies for us. And we've been working with the different players, you know, to understand the use cases, and on the other side to attract investors, because let's be honest, you know, at that time when we wanted to look at digital assets in Abu Dhabi, there was no investors in digital assets. So that would have been great, you know, to welcome these companies, and at the end of the journey, they can't raise. So that's why we got the commitment of several specialized VCs to come and work with us. We managed to get more than $2 billion of USD of potential funding around us in our community. And we received in 2 months around 700 applications specialized in digital assets, and just onboarding the first 9 companies 2 weeks ago.
So I can give you one example, and we're one of the Hub 71 partners. Anyway, one of the recent wars drove a flood of oil. So you have like Mobil, you have Shell. Aramco bought a company called Valvoline, and Valvoline basically sells motor oil. One of the challenges is a flood in this region of fake Valvoline, fake motor oil. Like literally it's fake. I mean, there's oil in there, but it might not be so good for your car. So one of our companies, what we brought to Aramco, to Valvoline, and they're engaged, is a anti-fake, anti-piracy track and trace QR code. So you just scan it, and I'm not going to go into how it works, but take me offline. But basically, you can scan it, the QR code with the Valvoline app or any sort of app from the company, and you can figure out whether it's real or not, right? And then they built in like a loyalty layer. So you can also figure out whether it's real, but when you scan it, you're also geotagging where the fakes are. So this is like a normal kind of like everyday application. Hopefully you knew that there's a lot of fake oil out there. Well, now you do. But this is basically a very standard kind of like run-of-the-mill application of how you can bring blockchain into the market and actually make money.
Authentication, that makes a lot of sense. And Andre, how about yourself and Modus Capital? Have you guys written any thesis recently? Or
Yeah, so we're quite focused on Africa, at least that's my job. And we've always been bullish on the technology, blockchain, for the African market across sectors, really. Some big numbers came in investment to 2022, grew by 400%, and then we know what happened since then. The positive thing, though, and the trend that we're seeing right now is a lot of people lining up and understand now there's big opportunities in Global South where blockchain actually solve problems. And this is where we focus when we look at investments, is how technology is actually adding value to the end users or solving a problem versus the other way around. And we're still big believer of Web 2 merging with Web 3 and not going pure Web 3. We're equity investors, so we look at the economics of the business, unit economics, token economics if there's one. And so those are the areas we look at or analyze when we want to make investment. Africa, we talk about fintech. I think there's still a big play in fintech. But the vertical is fat, right? Or at least needs to be fatter. And maybe moving away from payment or remittance and looking to more maybe KYT and stuff like that makes a lot more sense now.
Super cool. So Hasnae, earlier you were kind of talking about how you're a little bit on the sidelines, a lot of money is still parked on the sidelines, and people are a little bit conservative at this stage in the cycles. If you were following a specific trend right now, or the trend of the future, are there any particular industries or things that you think can be very valuable, bring lots of value, just like in Africa, as we were talking about the different KYTs, maybe in the next year, 2 years, or 3 years from now?
Yeah, well, one of them is emerging markets. I will state two. So emerging markets, markets such as India. However, you have to really be careful about that market a little bit. There's a lot of things to look into because it's a high-risk market, right? Political events that could change, and also the currency change in the country. However, when we talk about tech, so it's true that according to earnings reports, tech has outperformed, but what we have seen is that there are sectors that are actually doing good in the tech industry. One of them is AI, Ayotte, and then cloud computing, and the third one, which is blockchain technology. And I think if we leverage that on, I'll just add to the point of William, if we add that into technology itself, into these three sectors, I think we're going to see tech in general doing much better in the next quarter, in the next earnings season.
Fantastic. Elodie, we talked about the now. What about the future? What do you really want to see, or what are you looking at for the future in the 1 to 3 years to come?
So I think it's, as I was saying, we got around 700 companies who wanted to come to Abu Dhabi to work with us and to build, this new economy from Abu Dhabi. And what I would love to see is that in the next future, and you will see some announcement coming soon from Abu Dhabi government, not only from Hub, but way bigger and broader than Hub on the tech side. And what I would love to see is a real tech district, happening in Abu Dhabi soon, where these founders are coming not only to Hub 71 for an accelerator program or different programs, but where everyone is welcome to co-build with us, this new type of economy.
Fantastic. We know where to find you as well. Hub 71. Definitely find So, Jose, how about yourself? So you've just written like a long thesis. You've been preparing lots of documentation for the past year, I believe.
Yeah.
Right? So what is the future like for you?
So the trends that I mentioned before, I think that's what's happening now in blockchain. At Caerus, as a fund, we have a very long-term vision of how technology is going to play out. And the research started by looking at each of the industry verticals, music, sports, entertainment. What are the problems on each of these? What are the emerging solutions? And how will it play out in terms of timing? So you have two things. One thing is you have a new generation of consumers. You have Gen Z, Gen Alpha. They are completely different to the previous generations because they want experiences that are gamified, that are immersive, where they get to co-create. At the same time, you have the confluence of all of these technologies, AI, spatial computing, blockchain, and these two things create a new paradigm which is not yet here, but we are seeing pioneers. For example, you have a value chain, you have, let's say, a script, and you want to turn that script into a movie, you need to finance it, then you need to produce it. It starts with financing. Royal, it's a music application that enables artists to fundraise from their fan base and their fans to participate on the upside of the movie, of the music, so that enables them to have a portfolio of songs. That in terms of financing, production, there is a company that we were looking at, Wonder Dynamics. It enables the user to drop the computer graphic on top of a video clip. The AI reads who's the actor, the movement, and then replaces the person with this computer graphic character, for example. There's one founder that I really, really like. He's been working on stealth, but you'll probably hear about him very soon. He was trying to sit his son through a 2-hour tennis game, and he realized that he couldn't. He started building this combination of technologies that read with AI the movement of a tennis game, so they track the balls, the players, and you can bet with zero latency. Let's say if the serve is going in, if it's out, if it's an ace, and it just changes completely the product from a gamification side. So like that, we have examples throughout the value chain, all the way up to monetization, lots of problems, artists that are not getting the royalties, there's a black box, and blockchain solves all of these. It's a long-term vision. Let's say for music, it's difficult to predict when are these new Web3 technologies going to overtake Web2, let's say dethrone Spotify. Another example of that is Web3 social. There were so many crypto Twitters that have come up over the last year, but how long will it take until we actually, the masses, start using the Web3 solutions versus the Web2? I think it's going to take a bit longer.
I want to add one thing, since you asked about the 3 years projection. I don't want to seem pessimistic. I'm always optimistic, but there's an index that controls, that tracks commodities around the world. It's called BDI, Baltic Dry Index. And before COVID, we have seen it in a decline. And according to us, this is one of the indicators for a recession. And now that we're seeing that index and we're seeing the graph, we're looking into a W-shaped economy. So if the Fed is not capable of reducing inflation to below 2%, interest rates will probably still be on another hike. We might see another recession pretty soon, maybe in the second quarter of next year. I don't want to seem pessimistic, but
let's not end on that note.
Let's all start crying together. Hold our hands.
It's good to prepare for the worst,
of course,
right? And then you work for the best.
Absolutely, absolutely.
So we invest in Africa, so when we say Africa, it's quite general. But one thing that kind of underpins the opportunity where we're looking at is technology, quite from machine learning, large language models, blockchain, crypto, derivatives like that. But it's important to differentiate where those opportunities or how these technology help. You look at Kenya, climate tech, agri-tech is a really big play right now for us. You go to Nigeria, again, fintech is quite relevant. You go to South Africa, you're looking more on the tech talent side and the creatives, which makes a lot of sense there. So you always have to adapt what makes the most sense in terms of how the technology is driving value or solving a problem in which sectors. But I mean, that's what makes our job so much fun, right? And challenging to switch our hats and minds that way.
I'll give you an example, like, so Africa, I mean, hopefully, it's early stages, but we have this company, right? And they were trying to help Africans to invest in crypto, and they put all of their clients onto FTX. And then it blew up, and they blew up, and that was the end of that. But, you know, pretty good team.
Here's a crazy thing, though. Let's say they get 90% back. It's still better than holding the Naira.
Yeah, exactly.
Or the shilling. Anyways.
So, we met these guys after it blew up, right? And so it was a referral. It's a good team. Okay, they know how to build a product. They know how to get people using. The blow up was not technically their fault. They maybe should have diversified which platform they put all their clients on. But basically, there's another problem, which is like rails in Nigeria are difficult. It's banks on off ramps. Basically, it's illegal or it's a gray area, so which basically for us means it's illegal because we don't know. But apparently, P2P is legal, like person-to-person transfer. So their second incarnation is a very simple kind of old-school escrow P2P platform. Now, the funniest thing is that Naira, the currency, is a bit of a mess. And so they're actually getting traditional businesses using their P2P, I guess, exchange with the escrow to move money in and out of the country. So, because they can do a transfer in and out for about 0.5%, which, if you know anything about Nigeria, 0.5% is good. So the flows are working in there. So it's think about it like a blockchain solution or a Bitcoin solution for a very traditional problem, which is how do you do trade cross-border? Now, 2015, we did 2 companies trying to do this, and it turned out to be illegal, and they died. Now, you know, we're like 8 years later, and there are some pretty simple solutions to some pretty age-old problems.
Super cool. So we have 2 minutes left. I'm going to ask you guys one last question. At the beginning of this panel, we talked about taking it from the perspective of the investor or the startup that's raising funds. If you guys don't mind sharing one meaningful but also actionable item as your closing message each, that'd be amazing. Andre, if you don't mind me keeping up with you.
There's one, number 1, 2, 3, it's the same one, is communicate with us. I fundraise for the fund, founders are fundraising as well. Share updates, communicate, tell us what you're doing well, what you're not doing well, and keep us in the loop. That's how you build that relationship and trust.
Are you more of a wine or a shot type guy?
Wine or shot?
Yeah.
I start with wine and then...
You guys heard if you want to get Andre happy. Elodie?
I think echoing that, be persistent and resilient. I think that's the only way, especially now, to be able to get to the point.
Persistence and resilience is key, right? This is a marathon and a sprint at the same time sometimes, yes, right? It's brutal.
I would be conservative and prepare for the worst when you have quite blurry macro conditions. Being conservative with runway so that you're not in the most desperate position to ask for money and have a bit more leverage than other companies.
Thank you so much.
So if I trust you with money, it's because I trust who you are, right? So I would advise to build that human to human, and by building a story. What matters to me is knowing your story. What's your story today? Who you are? What do you do? How did you build it? All of these tell me, why do I have to trust you? And most importantly, tell me more about your ethics.
That's a really important thing. I think a lot of people go straight into pitch mode, but don't realize that storytelling is such an elegant way.
It's all about storytelling. Tell me what is the story behind your startup. Then I'm in to invest in it.
Super useful tip, by the way, if you guys are raising funds. And last but not least, Bill.
Generally pretty easy to find. I've got 6 of these T-shirts, one for every day of the week. Well, take one day of rest. So yeah, please reach out. We've done 32 investments this year. We are always around this active. Please reach out.
I love the color coding. So thank you very much. Let's give a round of applause to these wonderful panelists. Woo!